Hello and welcome. I'm Andrew Howard, Chief Investment Officer here at Catholic Super, and I'd like to welcome you to this investment update for the year ending 31 December 2023. As we begin the new year, let's look back on 2023 and review what transpired with the economy and markets. Firstly, I'm pleased to report that we delivered a really positive result for our members, headlined by our balanced growth option, which returned 10.19% for the 2023 calendar year. This builds on the positive long-term returns that members have received over many years. So despite a backdrop of increasing interest rates and talk of a potential recession in the US, equity markets were up strongly over the year, and this contributed to the positive returns we delivered for members. If we wind the clock back to the beginning of 2023, investor sentiment was in a very different place to where we saw it end the year. Most of the talk at the start of 2023 was that there was a high probability that we would see the US economy fall into a recession at some point in the second half of the year. This was due to expectations that with the US Federal Reserve continuing to raise interest rates, these higher rates would impact the underlying US economy and the US would fall into a recession. In fact, the expectations for this scenario were so high, it was being referred to as the most telegraphed recession we had ever seen. But by the end of 2023, investor sentiment had changed dramatically. Talk of a recession largely vanished, and the consensus view was, and still is, that the US economy will have a soft landing, which is where we see a cyclical slowdown in economic growth. This is despite the US Fed raising rates to levels not seen for over 20 years in an effort to combat inflation and bring it back down to targeted levels. So why the turnaround? Firstly, the resilience of the US economy in the face of rising rates surprised many, and it became evident that the fiscal stimulus we saw during the pandemic meant that the US consumer had higher saving rates and so has been better able to withstand the rate rises. US unemployment levels also are around multi-year lows. Investors were also buoyed by the Fed pivot that occurred in December. That was when, following the US Federal Reserve meeting in December, the chair of the board, Jerome Powell, indicated that the next move in interest rates would in fact be down. While inflation remains above targeted levels, policymakers in the US are confident enough that price pressures will continue to fall and have even signalled 3 rate cuts this year, with more to come in 2025. And so, we've ended the year with investors feeling confident that the US Fed has managed to pull off what was thought to be the near impossible, and that is to bring inflation back under control without pushing the US economy into a hard landing recession. The other key feature of markets in 2023 was the extraordinary rise in a small group of stocks that investors flocked to in the expectation that they'd be the major beneficiaries of advances in artificial intelligence, or AI. This group of stocks became known as the Magnificent Seven and include Microsoft, Apple, Alphabet, Amazon, Nvidia, Meta, and Tesla. While the performance of the US markets was strong, it was largely pulled higher by these 7 stocks. What this all boiled down to is that we saw equity markets up strongly over the course of 2023, largely as a result of the strong rally that played out in the last 2 months of the year. This drove great outcomes for our members, which, as I said, builds on the strong long-term returns the fund has delivered. As we begin 2024, US and Australian equity markets are trading near all-time highs, and the expectations of rate cuts in the US and solid earnings growth and the relative optimism that goes along with that already appear to be priced into market valuations. And so, while we hope 2024 plays out as expected, it might mean there is more risk to the downside should a nasty surprise be in store. On balance for us, the market outlook remains uncertain. The war in Ukraine shows no sign of a resolution, and conflict in the Middle East continues. But perhaps the most startling statistic is that 2024 will see more than half the world's population across 40 countries go to the polls for national elections, the largest election year in history. The US presidential election in November is the standout, with market attention heightening as it draws nearer. So, With geopolitical risks still at very much heightened levels and likely to stay that way for the immediate future, and with investor optimism also meaning that markets are already pricing in a positive year ahead, we believe that maintaining a well-diversified investment strategy will be critical in continuing to deliver positive long-term returns for all our members. If you'd like to find out more information, please head to our website. Thank you for watching.